What if one of the biggest software companies in the world is quietly preparing for its next major move? Salesforce stock has fallen significantly from its all-time highs, but analysts still believe the stock could have nearly 30% upside from current levels. In today's video, we'll examine Salesforce's business model, financial strength, growth potential, risks, and Wall Street price targets to determine whether CRM stock is a buy right now. Salesforce is one of the world's leading cloud software companies. It specializes in customer relationship management software, which helps businesses improve sales, marketing, customer service, and data management operations. Over the years, the company has expanded into artificial intelligence, analytics, automation, and enterprise cloud services. Today, thousands of companies depend on Salesforce's products every day. Let's begin with revenue growth. Salesforce generated approximately $41.52 billion in annual revenue. This enormous amount of revenue demonstrates the company's ability to maintain a strong customer base while continuing to expand its services. Because most of Salesforce's income comes from subscription services, the company benefits from a highly predictable stream of recurring revenue. This is one of the biggest reasons why many long-term investors remain optimistic about the company's future. Now let's examine profitability. Salesforce reported approximately $7.46 billion in net income and earnings per share of $8.68. These figures indicate that the company is not simply growing rapidly, but is also generating substantial profits. Strong earnings give management the flexibility to invest more money in research, acquisitions, artificial intelligence, and shareholder returns. This is a major sign of financial strength. Next, let's talk about valuation. Salesforce currently trades at a price-to-earnings ratio of 20.92. Compared with many high-growth technology companies, this valuation appears relatively attractive. Investors are paying about $21 for every dollar of earnings generated by the company. Many analysts believe that the market may be undervaluing Salesforce's long-term growth potential. Salesforce also pays a dividend to shareholders. Although the dividend yield currently stands at approximately 0.96%, the dividend itself is less important than the message it sends to investors. A dividend indicates that management is confident in the company's ability to continue generating strong cash flow in the future. This could become an additional attraction for long-term investors. Artificial intelligence may become Salesforce's most important growth driver over the next decade. The company is aggressively investing in technologies such as Agentforce, Einstein AI, automation platforms, and cloud-based data solutions. As more businesses integrate artificial intelligence into their daily operations, Salesforce could benefit tremendously from increased demand for its services. This is one of the primary reasons analysts remain optimistic about the stock. Despite its strengths, Salesforce still faces several challenges. Competition remains intense, with companies such as Microsoft, Oracle, Adobe, and Service now fighting for market share. In addition, economic slowdowns could reduce spending by corporate customers, potentially affecting future growth. Investors should always consider both the opportunities and the risks before making investment decisions. Now let's move on to the chart analysis. Based on the current chart, the strongest support area appears to be between $155 and $160. The first major resistance zone can be found between $200 and $210, while the long-term resistance area is located between $260 and $270. The recent price action suggests that institutional investors may be accumulating shares near important support levels. Wall Street analysts continue to have a positive outlook on Salesforce. The average price target currently stands at $237, while the most optimistic analysts expect the stock to reach $400. On the other hand, the lowest target remains at $160. Overall, analysts expect considerable upside potential over the next 12 months. So, is Salesforce stock a buy? Salesforce remains one of the strongest companies in the cloud computing industry. Its strong financial position, recurring revenue model, expanding artificial intelligence business, and solid profitability make it an attractive long-term investment opportunity. However, investors should remain aware of competition and broader market conditions. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you never miss another stock analysis. Also, let me know in the comments which stock I should cover next. Thank you for watching, and I'll see you in the next video.